Lyndall asks about LIC buybacks.
Your favourite topic.
Yeah. Oh, well, I get out of bed. I have
we talk about it every day.
I think about LICs. Go for it.
So Lyndall's invested in a few ETFs and LICs as part of his buy and hold strategy to have a dividend income stream. And one of his LICs has actually announced a buyback this year. But Lyndall doesn't really know what that means or why it happens. So has just written in to ask that question, which is probably good because I don't think most people would have experienced a LIC buyback before.
Yeah. So So this is an interesting thing. We were trying to figure out which LIC it was. We're not 100% sure, so we don't know the details. But so what is a LIC? Let's just real quick. We've talked about it before. It's a listed investment company. Think of it like a company that invests for you. We've explained this before. I'm trying to give the concise version. So the difference between a LIC and an ETF is inside an ETF, you get all your shares, all right? And you add up all the value of all those shares of all the investors, and that's called the NTA. And typically, the NTA is very close to the ETF's price, the share price. Like you log into your Pearler or your Stake or your Self-Wealth account and you see, ETF at $10.26. Typically, $10.26 is close to the value of the investments inside that ETF. Now, with a LIC, the difference is the value of the things inside can change compared to the value of the share price. So this is what we call a discount or a premium. So a discount is when the share price of the LIC is below the value of what's inside it. And the premium is obviously the opposite. Now, so what happens is say you're a LIC, Kate, I give you my money to invest for me, and you give me shares. With an ETF, you'd give me units, but in this case, it's a LIC, so you're going to give me shares. Now, the only way that I can sell my shares is if another investor buys those shares from me. And so what happens is you keep the $10 or whatever I gave you to invest for the long term. You've got that investment portfolio and you're investing it. It's locked in. And that's what we call a closed-end fund. So meaning that the money is closed in. Whereas with an ETF, when I sell my ETF units, I'm actually redeeming it for cash. And I can redeem it straight from the ETF provider, basically. We've been through that process. But with a LIC, you're actually trading the shares on the market, just like any other stock. And so when going back to this premium or discount, what happens is when the share price is below the value of the things inside of it, that's called a discount. But that's actually not a good thing, because what you're effectively getting is you're saying, okay, my investment in this, let's use Argo as an example. Argo is one of the LICs. Let's say my investment in Argo is actually below the value of Argo. How can that be possible? How can I own a Bosch dishwasher, but then someone else can buy the same Bosch dishwasher, at a different price? It doesn't make sense. So they should come closer together. Now, what the LIC providers can do is they can start buying back shares. So they can take money and they can effectively say, Kate or Owen, I want your shares back and I'm going to buy them back at this price. Would you sell them to me? Sure. And then eventually that pushes the share price up towards the NTA. Now, so we don't know the LIC in question of this, but if this happens, I like to see the value of the shares being below the value of what's inside, so a discount. If they start buying back shares and they're above NTA, it doesn't make sense.
No.
And I know this is a complicated and technical subject, but just know that, in my opinion, it makes sense to buy back shares when the shares are sufficiently below the NTA. But if they're at the same level, they shouldn't be buying them back. They should be investing.
I just thought it'd be interesting to touch on maybe some of the reasons why LICs do end up trading at a discount. Sometimes that can happen just because there's a poor awareness of that product. Not many people know about it, so no one's actually wanting to buy it. Maybe there's some issues with management. They've just done a bad job marketing. There might be some poor performance, but there's a few different reasons. I mean, I've been to one investor meeting for a a listed investment company before, and there was actually questions in the audience of people saying, why aren't you doing a buyback? The share's been trading at a discount this LIC's been trading at a discount for quite a significant period of time. And if you've invested in that LIC and you want to sell it at fair value, close to the NTA. You don't want to sell it at a discount. So you want that company to actually do some marketing and get some more awareness of that listed investment company, so more people want to buy it.
That's it. I'm actually just logged into the Self-Wealth account now, and I'm just looking at Argo, which is one of the big LICs. And I can see
that the one Scott Pape mentioned in his book, or was that AFIC?
I think he might have mentioned both, but it was one of the, maybe it was someone in our community is definitely going to pick us up on this, Kate. We're in trouble. But I think it might be AFI. So
I don't have the book in front of me.
No, me neither. So we can see if you go into any brokerage account, it might have of a LIC. You click on the LIC, like this is like the share that you find in your brokerage account. And why don't I just share my screen with those of you who are watching just real quick. So you'll log into your brokerage account, whichever broker you use. They basically all provide this information. And you can see here that the Argo Investments LIC trades under the ticker symbol ARG. You can see the share price is $9.55. And then if there's a ratio in here, and I'll zoom in a bit, you can see that there are two things. There's price to book right here, which says 1.16. And then there's price to tangible book, which says 1.22. They're basically the same figure. So what does this actually show you? This is effectively comparing the price to the value of the assets inside the company. That's basically it. Now, if it's 1 or above, it means it's trading at a premium, meaning that the shares are worth more than what's inside the book value. And if it's under that, it means that they're trading below, aka a discount.
And you can always go to Argo's website to look at what the NTA is for the LIC as well.
Yeah, that's it. So if we look at another one like BKI Investment Company, and if we come down here, and I know this sucks for people that are listening, but it's just an example. We can see for BKI, it's about 1.02. So it's basically the share price is matching it. So there's no discount and there's no premium. It's basically the same. So it's only when that number goes below 1 that then you start to ask questions, because you're saying, well, my shares are worth less than the actual company's assets. How does that make sense? And that's where questions are asked. And to your point, Kate, that can happen because the company, investors have lost interest. The company's not communicating properly with its investors. And that tends to happen in the lower down LICs, not the real big ones. Let's just put a bow on this. I want to give a real example of this. I was speaking to a fund manager on the Australian Investors podcast, and this was episode 3, I believe, with Tony Hansen. And during the global financial crisis, he realized that he could buy the shares in a listed investment company for 60 cents on the dollar. You know, that classic, buy it for 50 cents on the dollar. He could buy the shares for 60 cents. And then he could see that the investments inside the company were worth $1. Now, all the company would have had to have done is wound itself up. They could have just closed its doors and said, we're giving all your money back. And then what would have happened is Tony would have got $1 of value back for every 60 cents that he purchased. And that's an example of how, the buyback mechanism works, to try and basically say, hey, we know that it's below where it should be. We'll try and return money by buying more shares back. And that's it. It took us a while, but it was kind of like a deep dive into LICs and discounts and all that sort of stuff.